Zonda chief economist Ali Wolf predicts a rise in inventory levels in the later part of 2021. Is this a recipe for a massive market crash in 2021? Coming up on this week's Silicon Valley Snapshot. This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley Market Snapshot for the first week here in February of 2021. My gosh, time is flying by, and the inventory levels here in Silicon Valley seem to be non-existent. I mean, there seems to be no homes on the market, and that really has been the story for quite some time. Now, before we get into the data and before we get into the numbers, if you are a home buyer in today's marketplace and you're looking for a comprehensive data set to help you with your buying decision, go ahead and text the word data plus the zip code or the neighborhood or the area that you're looking in, and we will reach back out to you with a full customized report for any area that you're looking in. And if you are a home seller in today's marketplace, you're looking for a data set to help you price your property or understand where you stack up or how you stack up against your competition in your neighborhood, go ahead and text the word data plus your property address, and we will get you a fully customized property report for your specific home. Let's move into the data, everyone. Let's get into analyzing what it is that this year 2021 is going to bring, because if you've been watching my videos for any period of time, you will know that heading into 2021, I was incredibly bullish. And over the last 4 weeks, if you've been paying attention to the videos that I've been making, there's no sign of this market slowing down anytime soon. And we're talking all across the Bay Area, not just specific to Santa Clara County, San Mateo County, but predominantly actually in the exterior counties, the East Bay, Contra Costa, Alameda, San Benito County, outperforming previous year's metrics by not just a little bit, but by a lot. And what is the recipe for this performance? Well, it starts with the inventory levels, right? And that's what we're going to be focusing on today. Because it's the first week of February, we don't have the latest trend graphics reports yet for the month of January. So we're going to wait until next week. Hopefully they have those published. But until then, the first graph I'm going to share with you should not surprise you at all. In terms of months of inventory, we're at an all-time low over the last 18 months or so, with December being the lowest level of inventory that we've experienced in a long time. Now, if you see the previous year's December, we had over double the inventory levels, or nearly double the inventory levels that we did in December. And that momentum, that lack of inventory carried into January, if you've been watching the videos here in Silicon Valley, right? And so those inventory levels, that lack of inventory is clearly putting upward pressure on prices, as we're seeing homes get offers of 5, 10, 15, 20 plus offers on any given property here in the area, especially for single family homes. And that is the big distinction, is that the inventory levels in the condo sector and the townhome sector are definitely much higher than they are in the single family sector here locally. And there's a lot of reasons for that, some of which I'll get into later in this video, and some of which I may not tackle, but I have addressed in previous videos. Now, interestingly enough, the National Association of Realtors states that the existing home sales totaled 5.64 million in 2020, which is up 5.6% from 2019, and the most since the Great Recession in 08-09. Interesting that despite basically losing 2 months in April and May, we bounced back, mid-March through mid-May. The market was dead. And still, the economy bounced back, the housing market bounced back to the point where we saw more existing homes sell in 2020 than we did in 2019. Crazy. And despite that we had more homes sell in 2020, the inventory levels overall were lower in 2020, which is a recipe for disaster, right? If you're a home buyer, there's more homes selling and less homes for sale. What do you think that means for prices here in Silicon Valley? And not just in Silicon Valley, but nationally. If you watch my videos for any period of time, you'll know what I say is whatever happens here in Silicon Valley is just an exaggerated version of whatever is going on out there, especially when the market's hot. When the market is dipping, a lot of times Silicon Valley is almost immune. We live in this bubble where the tech industry has driven our economy and has bolstered it and propped it up on its four-legged stool. And we're almost immune to some of the other market correction factors that occur across the country. And so it's interesting to see how Silicon Valley has thrived in 2020 despite the work from home fad, we'll call it. And we'll get into that in a second. Piggybacking off of the inventory levels are the interest rates. When we're looking at, will the market crash? Will we see a correction in 2021? Clearly the inventory levels right now, as it stands right now, there are no signs of that rising or coming up anytime soon. Now, as we start to monitor and everything, the inventory levels, when we compare them year over year, right? We want to focus, how do these inventory levels stack up, not just in 2019, but 2018, 2017, 2016. Look at historical trends and see how are we stacking up. And as long as we're not, overshooting by 50% or so of what we've seen in previous years, we're going to be okay here. We're going to see property values continue to climb in Silicon Valley. Now, the other factor here are also the interest rates. If you notice, one of the key things that we've talked about in previous videos is the Housing Affordability Index. This is a number that's calculated through a variety of different metrics and stats, and the National Association of Realtors comes up with what they call their Housing Affordability Index. And so the higher the index number, the more affordable houses are. And so if you look at the graphic down below, you'll see that the most affordable, or the time where homes have been the most affordable, was right after the Great Recession in 11, 12, 13. But if you notice, we're at a 6-year high in 2020 in terms of housing affordability, despite the fact that inventory levels are down, despite that demand seemingly is up nationally. Homes haven't been more affordable in over 5 years. And there's a big reason why, and that is the interest rates. If you look at the next slide, it's very interesting, where you look at the national homebuyer's typical mortgage payment, which is inflation adjusted. People want to focus on oh my gosh, homes are worth millions of dollars now. How could they ever go higher? But when you adjust for inflation and you take into consideration rates, et cetera, you start to realize that homes are more affordable now than they've ever been, except for right after the recession in 2012. Where today's adjusted monthly payment, and I believe this is for a 20% down payment, fixed rate of 30 years. I'm going to say this is a $300,000 home. So definitely doesn't necessarily apply. The payments don't apply, but the same principles apply. In fact, I would say they apply, but they're exacerbated, because instead of 826 versus 1309, the two numbers there, you're multiplying that times 4. You're looking at 3,200 versus, almost 5,000. That's a huge difference in monthly payment, month over month over month. Even comparing it to, say, 2019 or 2018, you can start to see that homes are more affordable. And this is something that I've been talking about for many months now, where despite the fact that home prices are rising, the fact that interest rates have dropped, it actually has made homes more affordable, more accessible, because the price might be higher, the sticker price might be higher, but the monthly payments are lower. The purchase price might be higher, but the interest rates are lower. When you're negotiating with the car dealership, they like to fool you with the sticker price, but also make sure that you're negotiating that rate, because that rate actually brings down your payments a lot more than negotiating a couple $1,000s off the sticker price. So fun fact for those of you who are ever in negotiating cars, always make sure that you negotiate rate into the deal. Flipping on over to Mark Fleming. He's the chief economist for First American. Great quote. Rising interest rates reduce house buying power and affordability, but are often a sign of a strong economy, which increases home buyer demand. By any historic standard, today's mortgage rates remain historically low and will continue to boost house buying power and keep purchase demand robust. So what is he saying there? Is the economy weaker right now than it has been before? I don't necessarily see it that way now. There's a lot to say with the unemployment rates. There's a lot to say with forbearance. There's a lot to say about just how COVID has impacted the economy in general. Yet, when you look at the health of the stock market, which honestly influences the Silicon Valley real estate market way more than unemployment rates do, for example, or forbearance, and that's not just me saying that, that's just, if you look at the past 12 months, the stock market has had there's a lot more points of similarity, and it follows the housing trends here a lot more than, say, unemployment or forbearance have have affected it. And we've discussed why that is in previous videos. In fact, go ahead, J-Rod, go ahead and link the video where I go over all of those factors and why we're not necessarily experiencing the negative impacts of forbearance and unemployment. So if you're a home buyer out there and you're watching this video, it's not all doom and gloom. This isn't going to last forever. I've been through 4 or 5 of these cycles since I started selling homes. And, when we're in the midst of a really hot market, the end is seemingly never in sight. Yet the chief economist for Zonda, Ali Wolf, says some people will feel comfortable listing their home during the first half of 2021. Others will want to wait until the vaccines are widely distributed. This suggests more inventory will be for sale in late 2021 and into the spring selling season in 2022. Guys, you've watched these videos. This is a prediction that I've made many months ago where, once we start to regain some sense of normalcy, yes, we will see a lot of that shadow inventory, that inventory that would have been on the market, but sellers are holding off due to personal reasons, COVID, whatever. They've opted to not put their home on the market until we're back to normal. Well, guess what? When that happens, right, we will see more homes come on the market. Now, does that mean we are in for a crash? If you look at the condo sector and the townhome sector, you'll see that inventory levels are already quite high. And so if we don't readjust the levels of demand currently, we're in for a really, really big crash, especially in the condo and the townhome sector. But if you look at this forecast here from NAR's Real Estate Summit, you'll see that work from home numbers projected in 2021 in the fall are going to drop 3% from where they are currently. And in 2022, they're going to drop to 12%. And so you'll start to see more and more people go back to work. Now, I've been talking about this for a while. I've been saying, listen, this work from home thing, it's a fad. It's the politically correct thing to do right now. I'm not dismissing work from home and the fact that people should be working from home right now. That's not what I'm saying. What I'm saying is that at some point, when everyone's vaccinated and when COVID-19 starts to fade into the horizon, fade from people's memories, and the profit lines start to become impacted, a lot of these companies are going to be like, wait a second, you mean that having our employees work from home with 3 screaming kids running around all day isn't the best work environment for them? Maybe we should incentivize them to come into work. That's what I mean. And so as we start to see more and more companies incentivize, require, mandate people come back into the office, you start to see a lot of these urban areas, repopulate. You'll start to see a lot of buyer demand grow in those urban neighborhoods. And that will mitigate or offset some of the rise in inventory levels. Now, will that demand keep up with the rise? Hard to say. But what you have to realize is that inventory levels are so low right now that we'd have to double or triple them in a lot of the areas here in Silicon Valley in order for us to even be close to where we were at the same time last year. So we're talking massive surges in inventory levels would need to occur, quadruple, quintuple, in order for us to start to see a negative effect on home prices. And you have to think about that. We'd have to 4x or 5x inventory levels right now for us to see a negative impact on housing prices. That is insane. That's absurd. And so when you consider those facts, really difficult to say that the housing market here locally or nationally is going to crash anytime soon. Last thing to consider here, if you're watching this video, you're a home buyer in today's marketplace and you're saying, so it sounds to me, Danny, that you're telling me we should wait until the fall for the inventory levels to rise. And at first glance, that makes sense to me. That makes sense why you would make that conclusion. However, look at this infographic down below. This is something that I've alluded to with my home buyers that are buying right now. We're going up against multiple offers. In fact, we just got an offer accepted last night. There were 15 other offers on the property. My team got it done. There's a reason why, right? There's a reason why. Because number one, we understand the market and we understand how to educate the client and let them know exactly what to expect when they're making the offer. When you look at this infographic down below, it tells you the whole story. If you wait till the end of the year, right, housing prices will appreciate. And they're not just going to appreciate a little bit. We're seeing homes right now sell for over 10% of their previous market value. That's called appreciation, right? At the end of this year, the home that you could buy today for $1 million, at the end of this year will be worth at least, I'm not a single family home, will be worth at least in most neighborhoods, 1.1 to 1.2 million at least. We're talking 10 to 20% in some of these neighborhoods from its current market value today. If you factor that appreciation plus a potential rise in interest rate levels, we're looking at your monthly payments being significantly, not just a little bit, but significantly impacted to the point where a lot of people's purchasing power is going to diminish by not just a little bit, by a lot. That same single family home that you wanted to buy, good luck. Now you're going to be buying a townhome because that's all you can afford. I'm being brutally honest here because the people at home, you need to hear it. Right now, we're seeing one of the greatest waves of appreciation that we will ever experience in Silicon Valley history. The train is not slowing down, and when it does, it will be too late. Why? Because homes will be worth 10 to 20% more than they are today. And there has been only one time where housing prices have dipped more than 20% in Silicon Valley history. You're looking at very unfavorable odds if you're banking on the market crashing at the end of 2021 so that you can afford more house. You can afford the most amount of house today. And every day that goes on after this is the point of no return. Heed my warning. This is not a drill, everyone. This is not a drill. These are facts. By the way, if you have differing opinions and you have differing thoughts, I'd love to hear them. I'm open to criticism and I'm open to debate. I just know I'm right. So anyways, guys, this is Danny Gould with the Selling Silicon Valley Group. Wow, this was a long one, but thanks. If you're watching this video, you're sticking around to the very end. Go ahead and text the word shirt to the number down below. That's shirt to the number down below. I'm going to send you a free, and then send me your shirt size too. We'll send you a free Selling Silicon Valley shirt just for sticking around to the end of this video because it's a long video. So anyways, guys, thanks for sticking around. Thanks for watching, and we'll catch all of you in the next video.